Madeline Radner is the director of the Market Intelligence Desk at NASDAQ. And Madeline, welcome back to the show.
Hey, Oliver. Thanks for having me back.
So it seems like, as we've talked about before, I mean, it's been a pretty busy year generally, and we've had activity come back to capital markets. But do we get a little extra now that we got this cut, or how are you thinking about election? Kind of take me through the process right now.
Yeah, I think we are continuing to see a gradual reopening of the IPO market, and bankers and investors are really optimistic when they look at 2025. I think in terms of the election, we might see a slight uptick in October as we have historically, but companies typically wait it out until December post the election month, really just to avoid some of the election noise and political uncertainty. That said, we've already seen 153 IPOs across the U.S. exchanges so far this year that have raised just under $30 billion in proceeds. Last year, we saw about 158 that raised just under $23 billion in proceeds. So we're already nearly past the levels that we saw this time last year.
Wow. So we've already kind of exceeded the bar then to some extent. It's not like, we have to make up lost time or anything. It's been pretty busy.
Yeah, and I think something worth noting is that SPAC IPOs are definitely coming back. That appetite is definitely coming back. SPACs actually account for about a fourth of NASDAQ's overall listings this year. And I think we're seeing that for a few reasons. Obviously, the backlog from 2021 has improved, and a lot of those companies have been cleaned up a bit. A lot of the successful sponsors from the past are also coming back and getting involved in some of these deals again. So sponsors with a successful track record of involvement in some of these deals are funding these SPAC IPOs again. And the fact of the matter is, a SPAC is an accelerated path for a company to go public. So a traditional IPO might not always be the way for a company to move forward into the public markets.
All right, the SPAC is back. That sounds to me like that might be more than 50 bips showing up.
Yeah, definitely. I mean, when we look at the pipeline again, there's a couple themes that could play out. SPACs, one of them. That could play out leading into 2025, really. One of them is the increase in biotech filings that we continue to see. Also, the increase in biotech IPOs that we've seen. So far this year, there's been 19 biotech IPOs. And just a couple weeks ago, on September 16th, there were 3 IPOs in one day that raised a combined $700 million in proceeds. And those 3 are actually trading pretty well above their offer price. So I think that could be encouraging for other biotechs who are maybe waiting to see how their peers are performing. Maybe that could be a catalyst for some of the tech companies that are waiting out as well. Another trend that we are paying close attention to is the pent-up demand from, again, non-U.S. listed companies to list here on a U.S. exchange, and specifically from the Asia-Pacific region. So over 100 filings are actually from companies that are based in the Asia-Pacific region, which is very interesting. I think that goes to show that U.S. investors might be really willing to tap into this pool of liquidity and kind of this innovation in these different regions that we haven't really seen before.
That's a really timely thing to bring up because I guess I've kind of got my U.S. Bias on that. I'm thinking 50 bips here, but China over there too. So now you've kind of got a whole new impetus as well for a different section of companies. So I guess I didn't realize there was kind of like a backlog that had been building from the international market.
Yeah, definitely. And not only China, we're seeing Singapore, Japan as attractive countries for IPOs here in the U.S. And our vice chairman at NASDAQ actually just went out there and spoke about this on CNBC and basically mentioned there's just a lot of demand here from U.S. investors to, again, tap into some of the different sectors that we're seeing in those different regions. So it could be an interesting couple of years with that. Very
cool. By the way, just to come back full circle, I'm looking at a chart that you sent just to put some numbers to it again around the election stuff. It's not like you guys are spitballing here. You've run the numbers, and it does slow down, basically into and kind of out of, and then normalizes back in December on election years.
Yeah, based on some historical data, I think run by PwC and Dealogic. Essentially, during election and non-election years, the volumes remain consistent annually. It's really the IPO timing and some sector nuances that we see. So we could see companies waited out and then a pickup in December following the election, especially again, certain sectors, for example, healthcare, we could be seeing filings now that might be waiting until post-election, especially healthcare, who's waiting on different political uncertainties, different drug pricing policies play out. So some sectors could be waiting it out just to, again, let the political noise play out.
So it seems like the places that are the fastest right now to come to market are the ones with the most kind of disruptive momentum, because there's a ton going on in biotech, ton going on in tech as well, and maybe some help from China's government on the economy is disruptive in some way for the international stuff. Great stuff, Madeline. Thanks for the details.